we dive headfirst into the maelstrom of Russia's current economic crisis. A whirlwind of events has left the nation grappling with a financial storm of unprecedented magnitude. Western sanctions have hit hard, creating a liquidity shortage and inciting a run on banks that's shaking the very foundations of the Russian economy. The effects of this crisis have reverberated through the nation's financial infrastructure. The stock market has shuttered its doors, foreign companies have ceased operations, and major fund managers have frozen assets, leaving the economy in a state of suspended animation. Imagine a juggernaut brought to a standstill, its wheels stuck in the mud of economic upheaval. This is the stark reality for Russia today. The nation's creditworthiness has been downgraded to junk status, a telling indicator of the severity of the situation. As the storm rages, the Russian central bank is fighting to keep the economy afloat. It's a turbulent voyage, but the central bank is at the helm, navigating through the tempest. Stay tuned as we delve deeper into their strategies and countermeasures in the following scenes. The central bank has launched a series of drastic countermeasures in an attempt to stabilize the situation. In response to the escalating crisis, the central bank has pulled out all the stops. One of their first moves was to double the interest rates, a bold attempt to stave off inflation and encourage saving. This drastic measure was aimed at stabilizing the rapidly depreciating ruble and to prevent a total economic freefall. Next on the agenda was the purchase of gold. By doing so, the central bank aimed to bolster its reserves and add a layer of security to its financial system. Gold, after all, is a universal currency and a safe haven in times of economic instability. It's a tangible asset that can be used to shore up the economy when all else seems uncertain. But the central bank didn't stop there. They made a startling declaration that Western countries cannot exit Russian investments. This move, undoubtedly controversial, is intended to safeguard the Russian economy from a sudden outflow of foreign capital, which could potentially trigger a financial crisis. While these measures might seem extreme, they're born out of a situation of extreme economic pressure. The central bank is grappling with the harsh reality of Russia's creditworthiness being downgraded to junk status. This is a significant blow, as it makes it harder for Russia to borrow money on international markets and increases the cost of servicing its existing debt. In addition to these measures, the central bank is potentially exploring other avenues to bolster the ruble. One such avenue could be leaning on energy reserves, given Russia's status as a major oil and gas producer. Another could involve seeking cooperation from China, a powerful ally that could provide much-needed economic support. But the question remains, will these measures be enough to halt the economic collapse? As the central bank continues its fight against the economic fallout, the world watches and waits to see if these countermeasures will be enough to turn the tide. In the midst of crisis, could cryptocurrency be Russia's economic lifeline? It's a question that has been swirling around in financial circles as the nation grapples with a liquidity shortage and a run on banks. On paper, cryptocurrencies like Bitcoin or Ethereum, decentralized and resistant to control from any central authority, could be an attractive proposition. They could, theoretically, provide a way to circumvent sanctions and stabilize the economy. However, the reality is more complex. Cryptocurrencies, while revolutionary, are not without their challenges. One major obstacle is the lack of liquidity. The total value of all cryptocurrencies in circulation is simply not enough to prop up a national economy. Moreover, there's the issue of compliance. Cryptocurrencies are notorious for their use in illicit activities due to their pseudonymous nature. This creates a significant barrier to adoption, as Russia would need to implement strict compliance controls to prevent misuse and maintain international trust. Cryptocurrencies, it seems, are unlikely to be the magic bullet Russia is looking for. The ripples of Russia's economic crisis are being felt far beyond its borders. In this age of interconnection, no economy is an island, and the tremors of one can cause a seismic shift in another. Russia, being a significant global player, has a profound influence on the world stage. Its economic health, or lack thereof, sends shockwaves through the global financial system. Consider the impact on the energy sector. With Russia being a major exporter of oil and gas, any disruption can cause prices to skyrocket, hitting consumers worldwide. Then there's the effect on global markets. As investors pull out of Russia, they're also becoming wary of other emerging markets, leading to a ripple effect of instability. Further, Western sanctions on Russia can have unintended consequences. For instance, European economies heavily reliant on Russian gas could face energy shortages and price hikes. Finally, there's the human toll. The economic fallout can exacerbate social and political tensions, both within Russia and in its trading partners. As Russia grapples with its own crisis, the world watches and waits for the fallout. As the dust settles, what does the future hold for Russia's economy? We've journeyed through the tumultuous landscape of Russia's current economic crisis, examining the central bank's countermeasures, the role of cryptocurrency, and the global impact. Yet the road ahead remains uncertain and fraught with challenges. Russia's economy, once on the path to recovery, is now grappling with the harsh reality of Western sanctions and a liquidity shortage. The central bank has been unwavering in its efforts, resorting to drastic measures such as doubling interest rates and buying gold. Yet the question remains, will these actions be enough to stop the economy from collapsing? Some experts suggest that Russia might lean on its energy reserves or seek cooperation from China to bolster the ruble. The possibility of using cryptocurrencies as a solution, however, seems unlikely due to the lack of liquidity and strict compliance controls. As the world watches, Russia is at a crossroads. The decisions made now will shape the future of its economy for years to come. The interconnected nature of the global economy means that the ramifications of this crisis will not be confined to Russia alone. Only time will tell if Russia can weather this economic storm. Stay tuned as we continue to monitor this unfolding situation.